Joining us in studio, Leon Lowe, Executive Director of Free Market Foundation. We have Tsepo Khadima, Political Analyst, and Zamo Madlala, a spokesperson for the Black Empowerment Foundation. And you at home, you're most welcome to join us on social media or via live stream. Good evening, gentlemen, and thanks so much for joining us. So there's 14 key areas of intervention to help stimulate economic growth, and yet he talks of less radicalism than what we would have expected if that was the directive from the president of the ANC. A little bit of a deviation in your view, Tsepo?
No, not really. When I was making a case that former Minister Pravin Gordhan should be fired, I made a statement that South Africa, we were riding in a brakeless bus towards an economic cliff. What has happened now is just the driver switched. But the bus, if anything, has only now gained greater speed than it did. We've had a downgrade. When Pravin Gordhan gave a budget vote at the beginning of the year, he made an announcement that he was going to be borrowing 150 billion rand to effectively service our interest costs on our gigantum debt. Now we know that that has ballooned as a result of the downgrades to 200 billion that Treasury has to go and raise to effectively increase our debt. So nothing has changed. The situation is a lot more dire, and this is not a tonic that we so much need to revitalize this economy and get it where it wants to be. And we are in a dire situation. Before long from now, we are going to be forced to make the changes because we have refused to make the changes. We have refused to be rehabilitated as a country economically, and the signs are there. So if anything, I am more worried than I was, let's say, a week ago. And on a number of things. For example, our debt. Take this example. If you and I go into Edgar's today and we borrow money, we buy clothes rather, for 2,000 rand. So they sell us clothes for 2,000 rand, but they say, no, you pay me in 10 years, the 2,000 rand. But every year you must pay me 200 rand in interest. And then I go to Capitec to go and borrow money so that I can pay the interest to Edgar's. And next year I go to African Bank, and then whatever Mashonisa is there in line to be doing that. Where exactly? And when I'm borrowing that money from either a Capitec or whatever Mashonisa I'm borrowing from, I'm also borrowing that money over 10 years. That is madness incarnate.
All right, Mr. Lowe, in your view, Free Market Foundation, with the debt financing as a concern and with the prolonged, long or slow growth that the country has experienced, let alone the double blows of recession, etc., is this the best approach from Minister Malusi Gigaba, or do you think he essentially is retaining the status quo?
I would like to say that there's something new in it. There is something new, and I can touch on that very little, but essentially it's more of the same, and I have to agree. It's the bus is headed towards the cliff, or actually it's fallen off the cliff. And in here is absolutely nothing that will generate growth. And there's some very strange statements, for example, saying that they must implement Twin Peaks so as to reduce banking costs. Now that's very strange. Twin Peaks will add 6.5 billion rand of cost. Will add billions of rands of compliance cost. Yes. Most importantly, it will shut the door of any transformation. It will be impossible for any transformative business to enter the financial services sector. Already, the Financial Services Board said that 16,000 financial service providers, you can guess what color they were, serving a few 100,000 customers, you can get what colors they were debarred from operating. So this will raise the price, block any possibility of transformation, completely stifle any possibility of growth. So I'm afraid it's not transformative, it's not radical, it won't promote growth. That's a pity. The good thing, there is always good, there's a silver lining, is that it talks about putting an end to this nonsense of the failed state-owned enterprises like the Post Office and particularly SA Airways. He wants to sell or bring in private partners to SA Airways, but actually you can't. SA Airways is finished. It doesn't own any aeroplanes anymore to speak of. It leases them. It's just, all it is a bundle of debt. All you can do with it is actually just pay off the debt, shut it down and walk away. But so he wants to bring in what he calls private sector participation. which
I
is
just
a
wanna
strange,
unpack the
but he
issue.
doesn't
Sorry,
use
Leon.
the word privatize, of course, but that's what he means.
But we've been there in terms of toying with the idea of privatization with Swiss Air, etc. That didn't work. And similarly with Telkom and Vodacom and what have you. Where does that leave the imperative of, we always talk about the inequality. This is a pristine opportunity to redress whatever issues we may have had, use the necessary legislation. But it's, again, the rhetoric that we've heard before. Now we're saying to business, tough love approach, but you have an opportunity to transform by your own volition. If you don't, we'll then force you by legislation. Well, what do you make out of it? Is there a sense of hope?
Well, from the point of view of the current finance minister being a former youth league president and all of that, we certainly congratulate him for having grown up and being able to speak the speak, but he's really ultimately said really very little or nothing to us, except to say that he's going to sell off non-core assets which have never really been defined. Our understanding of non-core assets previously which have been sold is Telkom, Vodacom, Sasol, and when we look at it, ISCO as well. But now I look at it, we need to roll out Wi-Fi to the rural areas, but now the state no longer owns any assets to be able to roll such things out. So when he begins of talking of selling non-core assets, it needs a whole lot more detail. The part I like is that it sounds like there's a reacquisition of core assets. I wonder how those are going to be defined, because in what the finance minister has really come out and said, he said little or nothing that relates to what the policy conference was saying in terms of the forward trajectory. Now, he can't really say anything on radical economic transformation because he's limited by PPP-FA and PFMA. Those are still there. So you can't really ever enforce RET with those as the legal ramifications of how you may ever contract as a state. So yes, in terms of the discipline that the finance minister must hold, we congratulate him, but really his speech was little and much ado about nothing.
Yeah, but I mean, you've made the argument on various occasions about that state-owned entities are being deliberately mismanaged so that they become almost a dormant asset to sell off to the lowest bidder, as it were. What do you make now with Minister suggesting that we privatize some of these ailing SOEs?
Well, the question is to sell to who, to realize what value, what proceeds will come out of those sales. As you say, we will sell to the lowest bidder. Nobody's selling anything now. It will be no different to 2 years ago, 2.5 years ago, we sold oil when oil was at the lowest. And we sold oil, which we're not even an oil producer, we sold our only reserve. So that is really, as I say, the madness that continues. Right now is not the time to be selling. What the minister needs to do is to effectively get control of macroeconomic policy and need to do that with the presidents. One of our biggest weaknesses is this. We've got treasury that can borrow money without recourse, without authority from anywhere. In the United States, when they have to increase their debt ceiling, they have to go to Congress. In this country, Treasury for years has been borrowing money to the extent that today every woman, man, and child in this country has got the privilege of owing 40,000 rand on our national debt, and it is increasing. So, and that has never been approved either by the presidency or the president or even parliament. So that is something that parliament needs to take a sharp focus and look into that. To what extent can they continue to borrow? Beginning of the year, they said they are borrowing 150 billion rand or 149 billion. Now that figure is ballooned to 200 billion. Well, where is this going to end? That is one of the things. Unless we refinance our debt and realize immediately the savings from the refinancing of the debt, and we forgo this failed, discredited policy and theory of deficit financing, effectively to finance the budget. So whenever you hear them talking about investors, they are talking about people who are going to be buying our bonds to finance our budget. That is a failed idea. In fact, we're not even financing our budget now. We are effectively borrowing money so that we can service our interest costs. We have not even made any contingency on what are we going to do when most of the bonds are falling, are maturing and have to be redeemed. So that is the one thing. On the other hand, of course, The issue is this: your trade settlements. We worry about the volatility of our currency. The volatility, of course, it means that nobody's going to take long-term investment decisions because there's just no certainty as to, well, where we're going to be settling. And the Reserve Bank, that, by the way, says it needs to stabilize the currency. George Soros made $1 billion profit by shorting the currency of Britain, and the British knew better. How can we be such hot cops that we haven't learned what had happened, that we continue to say that we can be able to protect the currency? We don't have the means. We don't have the tools that, for example, the US has. They had quantitative easing 1 and 2, where effectively the Federal Reserve could print cash, and after they printed money, they released it into the system. Here, we don't own the Reserve Bank. That Reserve Bank doesn't even itself have its own printing press. So it can't print any money to be able to create more credit that the economy can function, that small businesses, medium-sized businesses, even big businesses can now have new credit that they can be able to invest in the economy, into the what? The bricks and mortar, into the hard economic assets. So we are heading, as he says, we have already fallen off the cliff.
Yeah, but has Minister Malusi Gigaba inherited a dysfunctional treasury or finance sector that has bound him? There's not enough room to maneuver in changing anything because of the policies that still exist, Leon.
Yes, I hate, we all easily get into binary discussions. Things are all good or all bad, and the world is actually much more complicated. There's a lot of good and there's a lot of bad, a lot to concern us and a lot to be pleased about and proud about in this country. However, there's something that's very basic, is we need growth. We need growth to be transformative, we need it to be high, we need it to be positive. Now, you don't say to people, please bring your money here and we're going to be mean to you. We're going to be tough with you. What you do is you have to have love, not tough love, if what you want is foreign investment. If, on the other hand, you don't want foreign investment and you think you can go it alone, then just tell them to go to hell. But now what we should understand is very, very simple. If you want growth, it's not rocket science. It's quite simple. You look around the world and you say which countries experience high growth and what are their policies. And those policies are very simple. They're unfortunately politically incorrect classical liberal policies. You liberalize, you lower taxes, you have fiscal monetary, conservative monetary policy. For example, if you take our labor policy, it has failed. We have the world's highest rate of sustained unemployment. Now, you cannot perpetuate a policy that's resulted in that.
But we also can't adopt policies that have worked for other nations when we have our own unique situation. Notwithstanding the fact that the injustice that was caused was also as part of colonialism and the fact that wealth and land was stolen from this country. So I think even when investors come, they need to be sensitive of what is the most urgent need of addressing that particular socio-economic problem.
No, there's only one set of laws of economics. The world's wealthiest and most advanced countries, America, Canada, Australia, New Zealand, and many others, Norway, have been colonialized. What makes you prosper or not prosper is your own policies. You have good policies or bad policies. And what works in China or in Rwanda or in Mauritius or in Cameroon or in Mozambique or Botswana will work everywhere on planet Earth. It's got nothing to do with religion or history or size or resources. Policies that produce growth everywhere. Policies that produce stagnation everywhere, and that's what we've got.
But not growth at the disadvantage of this particular socio-economic need. That's why the need for radical economic transformation or the second transition that this country needs.
Stagnation is not transformative.
No, that's fine.
Sorry,
that's fine. I mean, in as much as I have to agree, we've also got to get back down to the realities of South Africa, which has been reported now recently. There's a sector of the population that earns 69,000 Rand a day. There's a sector of the population that's been promised that from 2018 they can earn 3,500 Rand a month. Those are the realities. And those are the disparities that exist within the 55 million people that live in South Africa. So yes, there are all the wonderful theories, but there's the bottom line which says when you sit with an environment where there comes a minister, whether he was rogue or whatever, he comes and he says 30% must be owned by the majority population, and then you have a leader of the finance sector, one of the big financial sector companies, one of the banks, coming out and saying at a forum of the majority that the majority is crazy to ask for 30%, somewhere systematically the conversation is never going to come to light for us to find a solution, even if there's a solution, because to heart we don't have it in us to find the solution.
Yeah, but to find the solution, Tsepo, we, in terms of the management, control, equity, etc., using state agencies and the muscle that the public procurement process has, isn't that just another focal point to try and tip the scale to what this country need to deal with issues of inequality?
Look, that was a good initiative. Unfortunately, it hasn't been started. And I wrote a column about a month and a half ago where I said that by the end of this financial year, ending March 2018, not even 10% of the 150 billion rand that has been set aside from government procurement would have gone to black businesses. And that, unfortunately, is the saddest reality. So those are the steps that you can make towards transforming and ensuring that this economy is not as concentrated. On the other hand, macroeconomic policy, unless it is fundamentally reformed, we are headed for trouble. And by macroeconomic policy, I mean fiscally, we are living beyond our means. And unless we put a complete stop to that and we lose weight fast, because right now we are overweight and we are not agile. So we need to on the fiscal policy, the president, in fact, has to now call everybody else together with the Minister of Finance and speak to them and say, friends, this is not, that was yesterday. Today is a different world. On the monetary policy, again, unless and until you really start to have effective control on your monetary policy, it is impossible for you to be able to do anything economically. Manufacturing, for example, we talk about concentrated ownership of this economy. Now, that concentrated ownership of this economy, let me tell you what it has brought. It has brought lower output in the manufacturing space, whereby we're seeing big companies that are now importing, and the minister has not been able to put in import tariffs so that he can boost government revenue. And that is one of the areas which are of greater concern, because we have lost the jobs and therefore we don't have our key source of income, which is from what? VAT and from personal income tax, because of lower unemployment, and the companies are now intermediating and therefore externalizing profits. On the other hand, our tax code has to be reformed. Unless you reform the tax code, we are headed for trouble. If you look at the graph, companies have never had it so good. You can't do better now. If anything, they now need to start contributing their fair share. And I'm astonished that even on the mining space, the lower output in mining has got nothing to do with low commodity prices. Our weak currency should have in fact been an ultra benefit for us, because the raw commodities we export would have been any more. We've got illicit outflow. We haven't been able to stem that down. If we had stemmed that, we would have been any more in rand terms, because our currency is weaker. On the other hand, we don't have royalty tax. And this is one of the things that, on the key minerals that we control as a nation, if we introduced royalty tax, the world will not come to an end. If anything, you would rather lose a few jobs, but be able to earn more revenue, and soon the situation will normalize. Mining companies have not been investing in exploration. That is a fact. I challenge anybody to show me data that they say they've been investing in exploration. The reason why output is low in mining is because they've never spent money in production drilling so that they can be low-cost producers, but also be able to find new reserves that are mineable. And that's a situation that we are sitting with. So there are bigger issues, but this, unfortunately, calls for radicalism, and radicalism to the extent of being decisive and being single-minded, and not all the time trying to find out if you are getting approval, because you're not going to gain approval. And if we stop borrowing money, the rating agencies will not be affected. They are affected because we are borrowing money, but that money is not going into the economy, it's going to finance our budget.
Let's just get a response from the... No, I hear you. In terms of the economic haven that companies are enjoying, we've had another discussion where resources are then extracted, taken out of the country to essentially boost and create empires on the international stock exchanges without South Africa benefiting. Beneficiation, number one, the fact that we can produce and complete the entire value chain of a product before we import it to create more employment. There are means of engaging the private sector without being radical, Leon. At the moment, it seems as if there is still that level of protection that business is appreciating without with impunity, rather.
Well, let me just back to one I mentioned. this new bill governing financial services. It's quite interesting that the big financial institutions, which are going to have 6 billion rand imposed on them in costs or more, have been silent, have said nothing. Well, why do you think that is? The answer is because they love the fact that the government is creating a complete entry barrier to transformative and small and emerging businesses. If you want to go back to apartheid, and if you want to protect white monopoly capital, this bill would have made Verwoerd smile. This is and that's one of many. I can talk you one of many. For example, it talks here about the small business sector and what the Minister of Small Business, Lindiwe Zulu, should be doing. What she should be doing is seeing that every new measure has a small business impact assessment, and that no measure can be passed which is going to make things worse for small business. The Financial Services Bill will block small business completely and destroy what existing small business there is. And what she should be doing is saying, get rid of the stifling red tape, the smothering red tape, which makes it absolutely impossible for an emerging business to operate. And big business loves it. They love every time the government says, we've got a new measure to regulate some or other sector, whether it's mining or agriculture or transport or financial services. I'm afraid the measures which the minister is speaking about in his 14-point plan are measures, almost each of those will reduce the chances of transformation, reduce the possibility for emerging business, and all we're left talking about is how much can you take from the big pie, or the small pie, sorry, the not growing pie, the stagnant pie, from white people to black people. If that's the way people think we should transform, then black people should not be optimistic.
No,
if
I think
black
the term
people
is
want to
white
be
monopoly
optimistic,
capital, not necessarily, from black and white. But I'm saying,
let me just give you one statistic. If people want to redistribute agricultural farmland and they think this is somehow going to help black people, there's something like 30,000 farms. If you redistribute 100%, you've got 30,000 out of 50 million black people who would get some piece of land. And what's more, all of that land put together is 90 billion rands value, which is less than half of the overrun cost of one Excom power station, Medupi. So it's valueless. And if all people think is they're going to redistribute these farms and somehow make us better off, no, that'll actually not be transformative. What is transformative is high rates of economic growth.
Yeah, I don't think it's going to be an overhaul in that sense, as if it's a hostile takeover. But I think the debate is worthy to have in dealing with the redistribution of wealth and land.
Look, Cindy, if you went what former Minister Gordhan proposed of 30%, or what he offered, 30% of government procurement, you could create new industries, you could rejuvenate this economy. But that, unfortunately, is not being done. But on the issue of what Mr. Leon Law is talking about, Basel III, which is what the minister is talking about, the Twin Peaks model, he is correct, is going to put, we're going to have an army of compliance officers, and there's going to be nothing, there's going to be no new money coming into the system. But Germany, it should be giving us a better example. Germany is the largest industrialized and the largest economy in Europe. And Germany, the Minister of Finance there said, no, but no thank you. He has refused to sign on the Basel III Accord for one simple reason, because of the added cost and because it stifles. It's a one-size-fits-all. You can talk about Dodd-Frank in the United States. The effect, the negative effects of Dodd-Frank of the Dodd-Frank rather in the United States, what it did was to simply just create an army of compliance officers, but it has stifled business. Is that the route that we want to be going, more so as a growing economy? That is the argument we should have been advancing even at the G20, not to be saying we are going to be expediting the implementation of Basel III. We should have been making that case in point that we need our economy to grow, and Basel III is an enemy for growth.
All right, we'll leave it there, gentlemen. Hopefully there's still room to consult and have your pearls of wisdom shared with the minister before anything is gazetted, and we get back on the trajectory of economic transformation. Much appreciated indeed. That's Leon Lowe, Executive Director of the Free Market Foundation. Tshepo Kgadima is a political analyst. Zamo Madlala is spokesperson for the Black Empowerment Foundation. We'll take a quick ad break. We'll see you shortly.